In a matter of a week or so, I've taken a $100,000 account, took it to over $300,000. Okay, and you'll see that here in a second. But as it was dropping down, all this candle here, I was buying at the beginning of the fair value gap and about the middle of it, and I was trying to get into the lower portions of it, but it didn't quite get down there. All right, so here's the 5-minute chart. Here's the overnight London lows. 9:30, we run through it, taking out the sell side here, and then it starts to rally. All this rallying up here, I was not able to participate in. The market trades lower, down into the range between this low and this high. What is it trading to? Discount. So I'm going to go into this area a little bit tighter. Okay, so we can see here's our consolidation. It drops down, creates the low of the day, power 3. So it's accumulating long positions, manipulating early longs out of the market, taking out the stops overnight, then rallying, and then I'm looking for the continuation up to take out the relative equal highs here, because I think I'm still going to see continuation in the afternoon. So I want to buy this discount market, and I'm going to be buying inside of this fair value gap. And here we have Friday's trading here. Okay, Friday, Thursday, Wednesday, Tuesday, Monday. So we had a nice little decline down in this week, and then Friday we have somewhat of a retracement. If you've been following my community posts on the YouTube channel, I mentioned this morning that the 12,553 level is too clean. And you can kind of see it in here. Like, look at the high on this candle. It's 12,547, and then here this high is 12,553. So I'm using this as the higher one, but these relative equal highs, that's what I'm looking at. So I'm thinking that it could draw there. Now, I was giving it the opportunity to do so today based on what I showed in the short little vignettes I've posted on my video section. I was out and about today, so obviously I was sharing what I could on my phone. I don't generally trade on the phone. I can manage a position, but I'm not generally trying to enter trades and such. But I made a mistake today, and I was trying to exit, as I'll talk about in a moment when we get into lower time frames. But I was showing segments of me recording where the market was, what it was doing when I was entering the whole business, and you'll actually see the execution errors and all that business here tonight. But the relative equal highs, that was the draw on liquidity. Now, the draw on liquidity does not need to be traded to have a profitable framework or setup. Okay, so what do I mean by that? Well, if we're below this objective, and I'm thinking, and if it was you thinking the same thing, if you think that the market's going to draw up to that level, whether it be today or into next week, you look for a setup that will allow you some kind of participation in this expansion towards that. It doesn't need to get there. All right, so here's the hourly chart, and you can see relative equal highs up in here. Look at the high of that candle there. That's the 12,553 and a quarter level. Okay, so that's what I'm framing it on. And we traded down, started to run higher. We had a shift in market structure here. And then just notice how we have had this low, swept. We came down below it, came back above these relative equal lows. And then we came back down, tried one more time to go lower, and then rejected it. Notice that? So as the market's starting to trade higher, where is it likely to go? Well, we've already taken out a large pool of liquidity below these relative equal lows. This is sell side. Okay. Now we're back above these relative equal lows. So where's buy side? Clear and obviously right here. Okay. Not really obvious in terms of any imbalance in here because we already rebalanced this area there. So there's nothing really all that exciting except for that small little section there. So if it's going to go up to this area here, my thought process is that it's likely to probably just punch through and take the buy stops resting above here. So that's the draw on liquidity. Just think of it like a big magnet drawing price up towards it. Okay. So here's the 15-minute time frame, and here's Friday the 13th. You scared? I ain't scared. So we have the market trade here, lower, low, low. So this right here may trip you up. But this right here was the 9:30 in the morning manipulation where it takes out this overnight London low, creates the manipulation idea, then rallies. I was not available during this time, so I didn't take any trades. As you'll see, there's no trades in this area. And then the retracement in here in the afternoon, that's what I was looking for. So I wanted to see that type of idea. All right, so I've added the annotations here, and I gotta adjust this because my obsessive compulsive disorder is flaring. It's like a spider sense, folks. Can't help it. All right, so we have the New York session open at 9:30 in the morning, New York local time. Creates the low of the day, rallies, creates the high here. At what time? What time is this candle here? It's 12:10. That's that lunch time. Remember I told you it creates usually a retracement of some sort or consolidation. Then it retraces lower. And then here is 1:30, right about there. So at 1:30, the algorithm will start seeking liquidity. If it's going to continue higher, what's it likely to do? Seek sell side. So where's sell side? Well, we have relative equal lows here, but is that a discount from here to here? No. So this dashed line here that's in purple, I have that noted as equilibrium. That's essentially the same thing as if taking the fib from here to here, and that's 50%. Okay, so now we have equilibrium there. The market drops down into equilibrium and then below it into the fair value gap here. This candle's high, this candle's low. That's your imbalance. Fair value gap is here. So the market drops down into it here at 2 o'clock in the afternoon, 2:05, 2:15, 2:20, 2:25, and then displacement. Okay, we'll see this fair value gap on the lower time frames. I'm going to go through and let you see it, but this displacement on the outside is a shift in market structure. In a day that's likely to be bullish, is counter trend to a higher time frame, we're working with the logic that it's probably going to be a retracement because we've been down for a long time now, and most people are probably going to want to get out over the weekend. So the algorithm's going to start squeezing on them to get their positions squared before the close of the Friday. So in this area here, we're going to drop down into a 4-minute chart. Okay, no fair value gap shown here except for this small little area there. Now by itself, that's possible. You get a small little return into it there. I'm not looking at that. Okay, go down into a 3-minute chart. Okay, there's a gap there. Again, you can see that candle right there. That would be fine if that's what you were looking for. And then 2-minute chart. There is. Gotta set my chart back. It's gotta be the way I want it, folks. All right, so we have down closed candles in here, order block, fair value gap. This candle's low. This candle's high. There's our imbalance. Order block. It trades down, drops into that. And I'm going to show you the executions here. So as it's dropping down in here, you can see I have, hover over top of this thing, I bought 36 contracts. So in a matter of a week or so, I've taken a $100,000 account, took it to over $300,000. Okay, and you'll see that here in a second. But as it was dropping down, all this candle here, I was buying at the beginning of the fair value gap and about the middle of it, and I was trying to get into the lower portions of it, but it didn't quite get down there. So I want you to look at how the market created this counter trend idea, but still using my fair value gap principle and concept. Liquidity was above here. The day was bullish. The algorithm kept pricing higher and higher and higher, and the logic was delivered here. So look at where the arrows are for entries. And this was a failure on my part. I didn't get the price I actually wanted. None of these closures were actually above the 12,430 level. That was, I think, the closest one. Yeah, that was the closest one there. So, and I had one left over here, and that was the final bit of business. I was leaving it just in case some freaky occurrence where it would take us up in some parabolic run into 12,553, but this wasn't in the cards today. We're going to theme. You can frame what I'm teaching inside of a counter trend model if that's what you are by nature, a contrarian. If you want to be trading with the highest probability and in sync with the early session move, then trade exactly how I've outlined the principles around that 8:30 to 9:30 window. I'm trying to do my best to give you a little bit of freedom to try to make it your own and inspire you also that these fair value gaps are useful if you know what the bias is. Okay, and I know some of you are still posting in the comment section, I'm still struggling with bias. It's only because you haven't worked at it long enough. Okay, you're not going to watch a dozen of my videos and come away, now I know exactly how to do bias. You have to go into the charts and study each day. Back testing. What is back testing? Going back and looking at moves like this. Okay, marking them up on your chart. Now you can do it either using the replay button, watching them paint partially, or you can go back in hindsight and mark up your chart like this. This is all back testing. All this is me showing you what I actually did. Now, I was going to be facetious and talk about this for those that didn't really see the videos that I posted today where I actually did the pushing of the button here. The idea of me seeing it before it happens, that's proof of concept and it's proof of understanding. Okay, so I'm the author of this algorithm, so I can operate in it very efficiently. You, as a student of mine, you have to understand my language first. And then you go into the charts and you study with that language, and you'll be able to see repeating phenomena. And because you're able to do this in your own leisure, you collect these examples of hindsight movement with all of your annotations and your points of interest that you studied and see in your observations. Anywhere in a chart where it's empty space, you want to utilize that and have any kind of observation or encouragement to yourself. And you want to tell yourself in those commentaries that you saw this coming. Okay, and what this does is it tricks your brain. It's self-talk. Okay, it's one of the things that I actually used to overcome agoraphobia, which was the fear of being around other people, because I had extreme anxiety that started obviously from trading, because I built up this large image of myself. And in 2001, all that stuff happened. Okay, and I was afraid of a lot of things, and I had serious anxiety attacks, panic attacks that would come on out of nowhere. The coping skills that I learned to deal with generalized anxiety, I found that were very useful in teaching my students. And it was simply by taking positive self-talk, placing that into your back testing, where you're note-taking, you're, by all face value of it, you're lying to yourself in these posts in your back testing. So in your study journal, only you are seeing it. But you're tricking your brain and your subconscious because you're writing it out in your own words. You're studying it, you're looking at it. Your subconscious is retaining the image, but it's also retaining what you're saying in it. So when you come back to it at the end of the week or the previous week's backtesting log journals, you read them. And when you read them to yourself, you're reading your own words saying, I saw this setting up where this was likely to drop down here, and I was expecting this turn here because of the fair value gap. I wanted to see this displacement, and it occurred just like I was expecting. Then it comes back down in and allows me an opportunity to go long. Then I expected the market to move aggressively away from this area and start working towards these short-term highs. And I wanted to take something off above halfway, high to low. I want to take a premium profit scaling, and that's what that is there.